Hi everyone, and thanks for tuning in to another episode of Budget Investing. So I know it's been quite a while. It's been quite a hectic few months over in my life. I moved cities and I was able to purchase my first home, so it's been really crazy. One thing that I have not given up on during this time though has been my investing. So I was really fortunate. I didn't have to end up pulling any money out of my investing to purchase my first home, but I have slowed down the amount that I'm able to invest every single month, but I am still putting money in every single month. So I am making that progress forward every opportunity that I can. I really want to make sure that I am, following by the rules and everything that I share with you. And I have a small budget, so that's why you and I are kind of perfect working together. We can share our lessons as we go. I've made some changes, obviously, as you can see, to my portfolio here and just tracking things in a slightly different way. Now that I have a little bit more time and I'm not making these huge jumps forward in the amount that I'm investing, I'm able to track the growth that I'm having in an individual stocks for their dividends or my all-time dividends. As you can see, I have some that jump up really high, like Enbridge right now, which is my leading. It's given me $35 over the entire time that I've held it. The dividend growth year over year is going to remain in the negative for a quarter or two until some of these stocks start to actually pay me their dividends, or I get their dividends more than just once or twice. As I get closer to the end of the year, you'll see that this growth ends up starting to get more positive, as none of the stocks I currently hold will remain in the negative. So why are you here today? Obviously, it's been a crazy few months in investing. We started the year kind of at all-time highs within the investing world, and then very rapidly we dropped down. We had this huge major correction. We jumped back up. We made, a 6-7% rally. Things were looking really good again, and then the whole situation in Russia and Ukraine really jumped out, and we had this huge drop down again. And then, of course, we're having a bit of a rally again right now. And it's all over the place. How do you protect yourself in that? And what in the world can we do as investors? Now, there's a few things that we have at our disposal. The first is, of course, staying up to date, doing our market research, just seeing, hey, what is it that I'm looking for? At the end of the day, you have so many different resources that are out there. You can, obviously just Google, watch the news, see those major events that are happening. But you do want to make sure that you immerse yourself in what is actually happening in the investing world. So obviously the big thing that's happening in the world right now is inflation and the war and all of these supply chain issues. So what can we do about that? Well, the easy ones that we have at this point for myself is purchasing things that I know people are going to need to buy every single month, no matter what, even if there is a supply chain issue or all of these crazy inflation. With inflation, of course, we're worried about people not having the money to be able to buy these extra goods from retail. So how do I protect myself? Simple. I'm purchasing companies like Kroger. As you can see, they had this huge jump just recently where they jumped up almost 32% in such a short period of time. Now, I've held Kroger for a while, so this was a huge profitable jump for myself. Other companies are, Brookfield Infrastructure. Again, this is something that everyone needs to purchase. You need to pay your utility bill every month. You don't necessarily need to go out and buy the latest gadget or buy the latest clothing items that are coming out on the market. And of course, on the lines of utilities, you have to get those utilities from somewhere. And oil and gas, unfortunately, is still the predominant force of energy for the world at this time. There's just no opportunities for us right now to 100% be away from that. And with that in mind, there's obviously the whole situation in Russia and Europe with oil and gas. And Europe right now is currently relying on Russia for almost 40% of its gas, which is just insane. So for Europe, they're looking to all of these different places to get their gas, and North America seems to be one of the biggest producers that are willing to jump in and help out with that. So America and Canada have already said that they're going to ramp up their production and sell over to Europe so that they are able to continue with their use of oil and gas while they're waiting for these transitions to maybe greener energies. So we want to try to position ourselves to benefit from that. So getting in early, if at all possible, into those energy companies like Enbridge so that we can, make those profits and continue off of it. So you can see there's been obviously lots of ups and downs in oil and gas over the decades, but there's still a very large part of our market today, and we want to continue to leverage that to our advantage. Another opportunity that you could potentially use to your advantage right now is the big banks. Now, I know there's been some, questionable news coming out about taxes and what they may need to pay, but at the end of the day, these companies hold all of our money from our paychecks, and they're the ones that hold our mortgages, so that at the end of the month, we still have to pay these guys, so they're still always likely going to be profitable. So we'll continue to watch. They're in a bit of a slump over the last 6 months of 14%, but maybe that's just short term. Keep an eye on that. Watch the news. See, maybe they're about to make that quick rebound as they continue to make more and more money. These are just opportunities for yourself. Now, this really just brings me back to my strategy and what I was saying earlier about how I want to invest and how I want those companies to work hard for me. And I think Warren Buffett really does capture it perfectly. So I'm going to play just a quick clip here for you.
When people start to think, well, this could be the beginning of something really bad, it could be even a World War III situation, it could be a return to the Cold War. Does any of that ever go through your mind?
Well, if you tell me all of that's going to happen, I will still be buying the stock. You're going to invest your money in something over time. The one thing you could be quite sure of is if we went into some very major war, the value of money would go down. I mean, that's happened in virtually every war that I'm aware of. So the last thing you'd want to do is hold money during a war. And you might want to own a farm, you might want to own an apartment house, you might want to own securities. But I mean, during World War II, the stock market advanced, and the stock market's going to advance over time. American businesses are going to be worth more money. Now, dollars are going to be worth less, so that money won't buy you quite as much, but you're going to be a lot better off owning productive assets over the next 50 years than you will be owning pieces of paper or I'm going to throw in bitcoins.
So again, to kind of reiterate what Warren was saying there is, put your money into things that are going to work for you. And these short-term ups and downs, don't worry about them too much, as your buying power might go less, you buy less per dollar. But as they make you more money and they're worth more, you kind of break even in the long run. So, our strategy as a budget investor is to go, slow, and we're not going to get rich overnight, but there are opportunities out there when, turmoil does happen, and we want to stay prepared. We're going to make sure that we are looking into the news of what's happening every day to stay informed so that we can continue to grow our money. And in the long run, you'll see that the market value of my portfolio will consistently go up. Yes, there'll be ups and downs, but as I continue to get more and more dividends and compare back to my year-over-year dividend income, I can see that every single month I am making a little bit more money than I did last year, and I get to just keep throwing all of this extra money into my portfolio to buy more stocks, and I really get to snowball things here and build myself towards retirement or purchasing something that I want. So thank you very much for watching the episode today. I really do appreciate it. Please don't forget to like and subscribe, and don't be afraid to share this with someone who you think might benefit from watching an episode of Budget Investing. So thank you so much, and I will see you in the next video.